We're looking at 6 of the biggest IPOs coming to India. NSE, Reliance Jio, OYO, Zepto, SBI Mutual Fund and PhonePe. These are not small companies. These are businesses you already use and these are part of your lives. And together they could raise more money than entire IPO markets of previous years. Which is exactly why this matters. Because when names this big come to market, a lot of money flows in. But not every big IPO turns out to be a good investment. So the real question is not just whether you should apply, it's which of these are actually worth your money and which ones carry risks most people are not seeing. That's exactly what we are breaking down today. All these 6 companies with the real numbers, structure and risks that actually matter to you as an investor. So let's get right into it. Now, while we go through each of these companies, keep 3 simple questions in your mind. What is this business actually worth? Who is selling and why are they selling now? And what could go wrong? Okay, now let's start with company number 1, which is NSE. This one honestly is one of the most ironic stories in Indian finance. The National Stock Exchange or NSE, which is the platform where millions of Indians buy and sell stocks every single day, has itself been unlisted for nearly a decade. Think about that. The exchange that runs the market couldn't list on the market. So let me tell you what happened. NSE first filed for an IPO back in 2016. Things were moving and then a big controversy hit, the co-location scandal. What they found was that certain brokers had been given faster access to NSE's trading servers, which meant they could see prices and execute trades before everyone else could. That is as unfair as it gets. So SEBI stepped in, imposed penalties and IPO was frozen for years. Fast forward to 9 years and the green light has finally come. So let me quickly tell you what the business is actually like. NSE has more than 80% market share in Indian equity trading. It made around 19,000 crore in revenue and over 12,000 crore in profit. Operating margins are around 70%. 70% margins, that is genuinely extraordinary for any business anywhere. The expected valuation is around 5 lakh crore. Issue size is expected to be between 21,000 to 25,000 crore. Now let's see what's the structure of IPO going to be. Most of it is likely to be an offer for sale, which means existing shareholders are selling their shares. So this is more about unlocking value than raising new capital. None of that 21,000 to 25,000 crore goes back into NSE itself. But that doesn't make it a bad investment. A great business is still a great business. But it does tell you something, that the people who already own NSE want to sell some of it, were thinking about why. And here's the IPO timeline. NSE's own CEO has said they need about 8 to 9 months after regulatory clearance to actually list. So realistically, last quarter of 2026 or maybe even early 2027. If you're excited about NSE, the excitement is justified. Just pair it with some patience. Now let's move on to company number 2, which is Reliance Jio. If NEC's story is about waiting, Jio's story is about something else entirely. It's about a company so big that the existing rules just didn't work for it. At Reliance AGM in August 2025, Mukesh Ambani confirmed it directly. Jio platforms will list in the first half of 2026, subject to approvals. Now, the valuations that analysts are discussing is somewhere between $130 billion and $170 billion. In rupees, that's roughly 11 lakh crore to 14 lakh crore. You know what does that mean? On day 1 of listing, Jio could become one of the 3 most valuable companies in India, just like that. The offer size is expected to be around $4 billion, which is roughly 35,000 to 40,000 crore. Now, let's look at the business. It's massive. Over 500 million subscribers, more than the entire population of most countries. Jio carries around 60% of India's data traffic. Revenue grew 17% to 1,28,218 crore. EBITDA came in at 64,170 crore. But the detail I really want you to know is that SEBI used to require companies going public to offer at least 5% of their shares to the public. For a company of Jio's size, that 5% would have been an enormous amount of supply hitting the market all at once. So the rules were changed. Large companies can now list by offering just 2.5%. So Jio was so large that regulators literally rewrote the rules before it was even listed. That tells you the kind of scale. Now, the IPO will have both a fresh issue and an OFS, so some money goes into the company and some goes to existing investors. Now, one thing to keep in mind though is that at 11 to 14 lakh crore, you're paying for a very long runway of future growth. And telecom businesses, however dominant, always need capital. That's just the nature of the industry. Now, let's move on to company number 3, which is OYO. Now, this one is a very different kind of story. OYO has tried to list twice before. In 2021, they came to market asking for a $12 billion valuation. The company was deeply loss-making at that time, so investors and regulators asked the obvious question, when does this actually make money? So the filing was withdrawn. In 2023, they tried again quietly through the confidential route. That too was abandoned in 2024. Conditions weren't right and the numbers still didn't support what they were asking for. So what's different now? The numbers are actually there this time. 12 consecutive quarters of positive EBITDA. In FY25, OYO posted a profit after tax of 623 crore, which is up 172% from the year before. Revenue was 6,463 crore. And beyond India, OYO now operates in more than 35 countries, including the acquisition of Motel 6, which is a large budget hotel chain across US and Canada. And here's the part that actually impressed me during our research. The valuation they are targeting this time is $7 to $8 billion, down from the $12 billion they asked in 2021. They came back with a lower number, not because the business got worse, but because they are being realistic about what it's actually worth right now. That kind of discipline is rare and it matters. And unlike telecom or payments, hospitality is not a winner takes all the market, which is why OYO's model is about scale, not dominance by market share. Critically, we should wait for the DRHP to be filed so we can see whether it's an offer for sale or not and what percent is for OFS as well. Now on to company number 4, which is Zepto. Now, where on one side OYO took years to get to profitability, Zepto is still on that journey, and that's exactly what makes this one interesting and complicated at the same time. Revenue in FY25 came in at 9,669 crore, that's 129% growth year on year, which is impressive. So people are using quick commerce and that part is clearly real. But alongside that revenue is a net loss of 3,367 crore, and that actually makes sense because building dark stores, delivery networks and cold chains across dozens of cities costs a lot of money before it starts making money. Zepto is expected to refile its DRHP with an issue size of around 11,000 crore at a valuation of roughly 60,000 crore. Now let's look at the competition because this is the part that really matters. Blinkit, which is backed by Zomato, has about 47 to 49% of the quick commerce market. Zepto is at 21 to 23% and Swiggy Instamart is around 24%. So Zepto is fighting for second place against a competitor that has the full backing of a listed profitable parent company. That is genuinely hard. But here's one number that gives me some optimism. The time it takes for a Zepto store to break even has come down from 23 months to 6 to 10 months. That's a big improvement. It shows the model is getting more efficient. Now the question is just, does it get to profitability fast enough? And at 60,000 crore, are you being compensated well enough for taking that risk? And the OFS or fresh issue terms are not sure yet, so we will have to wait for it as of now. Now let's move on to company number 5, which is SBI Mutual Fund. After all the previous stories, I know this one could feel a little dull, but sometimes boring is where the real money is made. SBI Mutual Fund is the largest AMC in India. It manages over 12 lakh crore in assets. That's about 15.5% of the entire Indian mutual fund industry. And the backdrop for this business right now is really something. Close to 9.92 crore of active SIP accounts in India today. Monthly SIP inflows crossing 29,500 crore, total industry AUM above 82 lakh crore. Indians are moving money from fixed deposits and gold into mutual funds. And this isn't a short-term trend, it's a real behavioral shift in how people think about saving money. That doesn't reverse in one bad quarter. SBI Mutual Fund filed its DRHP with SEBI on 19th March 2026, making it the most ready of all the 6 companies we are covering today. The listing is targeted for September 2026. The IPO size is around 13,000 crore. Valuation is around 1.3 lakh crore. And this one is a pure OFS. SBI and joint venture partner Amundi are selling around 10% of their combined stake. No fresh capital is coming into the company, that's worth noting. But here's the comparison that matters. HDFC AMC listed largely as an OFS back in 2018, and since then it's been one of the strongest compounders on the Indian market. AMC businesses grow naturally as markets go up and more investors come in. You don't necessarily need fresh capital when your core job is managing other people's money. And now, the last one on the list, basically a platform most of you have used at some point. Company number 6, which is PhonePe. By early 2026, things are pretty much in place. SEBI approved the IPO on 20th January, bankers are set, DRHP is filed. Issue size is nearly 12,000 crore at a valuation of around 75,000 to 90,000 crore. The business numbers are real. PhonePe processes nearly 48% of all the UPI transactions in India by volume. Almost half of every digital payment in this country goes through PhonePe. Revenue in FY25 was 7,115 crore, up 40% year on year. And on an adjusted basis, excluding stock compensation costs, the company has turned profitable. So strong brand, dominant position, growing revenue and improving profitability. But there's one risk here that I specifically want you to know about because not enough people are talking about it. NPCI, the body that governs UPI, has proposed capping any single player's share of UPI transactions at 30%. PhonePe is currently at 40%. If that cap is ever enforced, PhonePe would need to give up nearly 20 percentage points of market share. That hits revenue directly, that hits the entire investment case directly. Now, this cap has been pushed back before and may continue to be extended. But it's a live, unresolved risk sitting right at the heart of the business. CEO Sameer Nigam has confirmed they are committed to listing in India, but no specific date beyond the 18-month SEBI approval window from January 2026. So, great business, real risk, keep both in your head at the same time. So these are the 6 upcoming biggest IPOs. Now don't just apply because it's popular, apply where it makes sense. So which IPO are you most excited for? Tell us in the comments. And if this helped you think more clearly, like, share it with someone who's always excited about IPOs and subscribe for more such deep dives for investors. See you in the next one.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.